to discuss this and more is none other than Mr. Mwima Andrew, our very own, of course. Thank you so much, Mr. Mwima, for joining us on the show.
And it's a pleasure. Good evening, viewers. Thank you, Anthony, for having me once again. And I look forward to a very fruitful discussion.
Yeah. Now, Mr. Mwima, I hope you've been doing fine recently. I think we last met a few weeks ago. But let's talk about the capital markets in general and in terms of how companies raise capital. Could you shed for us a light of what exactly entails the process of raising capital through the capital markets? Who is the eligible business or personnel who can actually raise capital through capital markets, and also draw for us a line between the private and the public?
Thank you, Anthony.
Yes.
And like you rightfully put it, the principal role of the capital markets is actually to assist businesses and other institutions to raise finance. I've had the privilege of going across the country, doing some trainings on investments and finance. But if you are to ask a businessman or woman how they raise finance or what sources they think of, majority always think about the banks. I will start this business, but when I want to grow, I will only visit this bank to give me a loan. So our society has been structured in that way, that most businesses in Uganda are funded through the bank loans. But the principal role of the capital markets is actually to assist fund or to raise funding for businesses of all stages. And these businesses have cycles. There's the beginning, then there's the growth phase, they mature and expand. I like relating it to a race. If you watch Olympics, people will have sports once in a while. There's the release, where around 4 people go around the pitch. So when you're beginning a business, your personal savings will assist you up to a certain level. But you will reach a stage as a business, you will need the banks. The banks will also push you up to a certain level. Then maybe private equity, then ultimately the public markets or the capital markets. You will discover that if you run your business from beginning to end using savings, it may not attain most of the objectives you may want to undertake. So at all stages, have that thought process that I need to change the financing partner. So the capital we are speaking about in the capital markets industry is limited to institutions only, but businesses of all sizes. So a company that is seeking to borrow for a short period of time will issue what we call a commercial paper, then they can do what we call private equity. If they are looking for the alternatives we are going to discuss later. Then as they grow, maybe they can do private equity and IPOs. The other institutions, like we have seen in the past, the government also can borrow for a short period of time from the public markets like ours by issuing treasury bills if they are short term and treasury bonds if they are long term.
Let's first go slow on this one, Mr. Andrew. When we talk about financial markets in general, we look at them as financial instruments. First of all, primarily, they help businesses raise capital, right? They help governments also raise money. But now, let's go back to the difference. You've talked about a commercial paper. And when you talk about a commercial paper, in my own understanding, at least I see it as a treasury bill, but for business. I don't know if I'm understanding it right. Is that correct? It's a short-term instrument that a company borrows from the public.
That is it.
In the short term.
That is it, Anthony. So a private place, rather a commercial paper, is that debt instrument. It's a loan through the capital markets or the stock exchange that kind of resembles a treasury bill, meaning the duration is either 3 months, 6 months, or 1 year. Very close to what the bankers would call an overdraft, a very short-term instrument. So these are some of the short-term alternatives that may assist a businessman or woman listening to us out there that has those short-term needs. Maybe you have containers, you have a contract that needs execution in a year or less.
When I look at some of the statistics here, fund managers have also been investing in some of these assets. You look at corporate bonds, and then when you look at commercial papers, they take a very good percentage when it comes to investment of these fund managers who are managing collective investment schemes. But let's talk about who can actually get to issue a commercial paper or a private equity placement. What kind of business? Are there limits in terms of the minimum capital requirements, in terms of the customer base, in terms of the nature of the business? What business can actually be able to raise this capital?
Thank you, Anthony. And if you notice at the beginning of my submission, I spoke about the stages of the business. Just to make it a little academic, there could be a startup, then early growth or early stage, and expansion and maturity. Now, if your business is grown enough, the big companies we see, the MTNs, the Airtels, the exchange and the capital markets have a segment which is called the main investment market segment. If you're thinking of doing a bond, issuing a corporate bond, you need to meet a certain criteria. At least demonstrate that you've been in existence for 5 years, you've been profitable 3 out of the 5, you have a decent management in place, and also your ability to pay back. Now, if you're starting a startup, we have what is called the growth enterprise market segment. There are other initiatives like a dollar, which target those which are starting and the early stage. Many times the requirements for you to access both the debt and equity alternatives are actually relaxed. You may not need to be profitable per se, but you need to sell your vision, demonstrate that your business is able to grow, and indeed revenues will be able to come out and to meet these obligations. If we are to just plant a stick there, every time you're issuing a commercial paper or a corporate bond, you're borrowing, meaning you have to pay back interest and principal. So whether you're taking it out short-term, long-term, you must always show the investors or the regulators that you have the capacity to pay back. So a very decent business plan can really sum it up. It has all those ingredients which you will use.
So what are the steps that a business can take in order to be able to issue a corporate bond or a commercial paper? Because much as you've mentioned, there are many businesses that have actually been able to raise lots of money and they have a lot of capital inflows, but they still don't know how they can be able to start. When you look at, for example, the initial public offer, we have what we call a prospectus. Businesses issue a prospectus to the Capital Markets Authority. The Capital Markets Authority reviews the same, and after reviewing and studying the prospectus, this prospectus also includes financial statements of the last, let's say, 5 years, and there must be signs of profitability in the business. So is it still as complicated for still the issuance of corporate bonds and commercial papers as it is for an initial public offer, or it's a little bit simplified for this case?
I would say, drawing from my experience, the process is actually similar. If you want to get money from the public, the process is literally standard. But just to walk us through, whenever you get this dream or goal that I want to one day access funding, through the public markets. Issue a commercial paper, issue a corporate bond. It's important you visit the exchanges or visit the regulator earlier now. That way you will get acquainted with the requirements and the things you must have in place. Fast forward, after visiting the regulator, you will need to appoint advisors. The way these markets are structured, a business cannot come on its own to issue these instruments. You will need lawyers, you will need accountants, you will need sponsoring brokers, investment advisors, and a series of advisors. Each of them has a very unique role which they play. So the investment advisor goes ahead to do a research for you. Remember, you're borrowing, but this money is coming from the public, where people need to know that they will get value after lending you this money. So they help you to structure what relates or resembles a business plan. Only that in the public markets it can be called an information memorandum or even a prospectus. So it will speak about the threats, opportunities, the strengths, how is the competition in your industry, generally to show somebody out there that your business can withstand the test of time and it has the ability and capacity to pay back. So there are also risks associated with legal. You need to have some assets which can act as collateral. You're borrowing money, people need to know that worst case scenario, if you fail to pay, there are some assets which can be sold.
Liquidated, yes.
Liquidated with ease in order to pay back. So the legal component is very critical. So in addition to that, they will do for you the documentation. You spoke about the audited accounts, the information memorandum, the legal reports, auditor's opinion, director reports and what. So beyond that, they will formally apply to the CMA or the USE, which is a stock exchange, that form of application, that this business of ours wants to raise maybe 50 billion or 100 billion from the public. Once you're granted or given a green light, then you can go ahead and conduct road shows. This one is important. From my experience, I've sensed that even companies which the owners feel that everybody knows us, who don't invest in marketing, sometimes their transactions fall short. The undersubscription we hear about. So you need to make people aware that we are actually
a corporate bond.
Yes, there's a corporate bond, a commercial paper. We are coming to get something from you. This is how you'll benefit. So that marketing is quite important. And at the end, that's where you hear of the ring the bell events. Once the thing has closed, the transaction has closed to the public, you ring the bell and your company starts trading on the stock exchange after you've raised the funding.
Amazing. Now let's get back a little bit to the basics. You talked about treasury bonds, treasury bills as being sources of revenue for government, short term, long term. Then we are talking about corporate bonds and commercial papers. That is long term, short term, still sources for businesses, that is private businesses. Now, what is private equity now? Because this is also something that we've seen as a common source of funding for different businesses. How does it differ from the other sources that we've talked about, the corporate bonds and the commercial papers?
Thank you very much, Anthony. If you're to look at some requirements of going public, they may be like at the point of your application, let 20% of your company, let those shares of units of bond have at least 100 subscribers or 100 investors. Now you discover that you may sometimes need one investor in your business. You may not be comfortable with having 1,000 people you will be accountable to. So that option is also open. And we appreciate it in this industry that sometimes even the IPOs we see now, they initially got that injection from the private equity investors. So these people will give you their money, but you're not public. You're simply answerable to one fund. It could be a local fund, it could be an initial fund. So with the private equity, you simply sell off a portion of your company. It could be 20%, it could be 50%, depending on the valuation which the advisor has done. So that those shares are sold to one company, which in return gives you money. So 20% of one business could be $10 million. So that $10 million injection you get can assist you to expand. But still, since they have deployed money in your company, they expect returns. So you will be accountable, you have to...
How do these returns come out? Because I'm seeing a company, let's say, is worth 100 billion.
Yeah.
And you're saying, let's sell out 20%. So 20% of 100 billion, that's 20 billion.
Yeah.
So I come on top of the 100 billion, because I'm not taking away, right? I'm going to invest. So on top of the 100 billion you have, I'm just being a little bit practical, I bring my 20 billion, right? Now, doesn't that raise my, let's say, the capital to 120 billion? Doesn't that mean that my business has grown bigger, or it remains at 100 billion? And then me, I'm just bringing in the 20 billion to supplement on what you already have. How does it play out? Yes.
I think, like you rightly put it initially, you're looking for capital. So if somebody has valued your business at 100 billion,
yes,
and he injects another 20 billion,
yes,
so that's a plus. Okay. So the valuation of your business is expected to grow to 120.
When and how does this person fetch returns?
Usually the way these private equity deals are structured, because many times a private equity fund has investors behind them. Those investors are...
Oh, now you're introducing a new term here, a private equity fund. What is that? Is that like a company that only looks at investing in private equity?
Yes.
Amazing.
Absolutely.
And I'm sorry, but I'm getting more excited as we delve into this, because Quality Chemical Industries recently had a switch from Cipla to Quality Chemicals.
Yeah.
And this was after a buyout by African Capital Works, a private equity firm, which at least by my knowledge I know is an investment firm based in the US.
Yeah.
And this company bought the 51% stake that Cipla formerly had at over about 112 billion. So are these the private equity firms that we are talking about?
Yes. In fact, you will hardly find a private equity investor who is an individual. It could be an individual, but they have a fund.
Quite not sure.
I don't know. There's a popular musician, an Irish musician. I'm forgetting his fund, but he at least owns one vehicle, the 8 Mile. They have invested locally also. So the way they are structured, they are either partnerships or limited liability companies, but they get money from investors abroad or even locally who are looking for growth, higher returns on their investment. Because you will notice that a company which is in the infancy or early stages has a very bigger chance of growing and multiplying your money, people listening to us, compared to a mature company. Because this company gets that injection of $20 million, you will discover the valuation will even go beyond the 120. It will quickly become 200 or something like that. So typically, these people who give money in these private equity deals, they may have what we call a lock-up period. A lock-up period means that they may say, deploy that money we have given you for 3 to 5 years. After 5 years, we expect to receive something in return. So it could be structured in such a way that the dividend they receive after that lock-up period resembles interest. In finance, we call it a preferential stock, that dividend which you must pay. It's kind of fixed, but the business has to pay it. So these are some of the terms and conditions which are stated in the agreements with the business. That's why the legal advisors are key also. Remember, besides giving you the money also, I thought this was important. Many times the private equity investors become partners in your business. Yes. Yeah. They will take up roles which are critical. Yeah. They could bring their CFO, bring their chief operations officer. It's not somebody lending you money and abandoning it. So they are heavily involved
in the business.
So these Liberty private businessmen and women have to buy a car because you have received this capital injection. May actually not happen. You want to build a house. So these guys expect that return and effective performance from the money they have lent.
Who regulates private equity? Do they have a body like the CMA, or they're entirely privately managed?
The way these deals are structured, they are actually out of the purview of the CMA. They are not regulated per se across the world, unless that private equity fund is public. You could have heard of the Black Rocks.
Yes.
Some of these large companies like Propaco are actually listed in some market somewhere. If they are like that, there could be some answering. They do. Even Centum. Centum is an investment company just across the border. In Kenya, they have invested here heavily in Palomarina, the properties. So if they are listed, they are answerable. But besides
if they are not listed, they are
it's a venture capitalist, private equity fund, they are not regulated.
Introducing another very good term. But I think we need to go for a break first. The venture capital. We want to know how different is venture capital from private equity and from the other equity that we're talking about, the public equity as well. But also, you mentioned something critical to do with that in private equity firms are usually interested in startups. Is that something our businesses, the small and medium enterprises, can also explore to be able to expand their businesses and of course grow and become big mega businesses that could actually be listed on the exchange? But also we want to look at the benefits, the pros and the cons of private equity and public equity. What are some of the advantages that private equity has over public equity and vice versa? We want to know, when do I choose what, and when what is best suitable for what business? We'll return shortly after this quick break. I'm with Mr. Andrew Mima. We are discussing private equity and public equity. What are some of the key highlights and the differences between the two? We'll return shortly after this commercial break. Don't touch your dial.
Smart 24, driving business.
Are you a female business owner in Uganda looking to grow and transform your business? Grow empowers you with access to entrepreneur services, accelerating your business growth from micro to small and from small to medium enterprises. Grow provides comprehensive support, including training, startup tools, business formalization, certification, networking opportunities, access to affordable credit and grants, coaching, and mentorship, with all resources available for free. For more information, please visit grow.go.ug. Contact the PSFU Grow officers at Trust Towers, ground floor, plot 4 Chadondo Road, Nakasero, or the Ministry of Gender at plot 2 George Street, Simba Manyo House, 3rd floor. Call us at +256 394 514 071. This message is brought to you by the Grow Project, a Government of Uganda project implemented by the Ministry of Gender, Labour and Social Development and PSFU, funded by the World Bank. Grow, generating growth opportunities and productivity for women enterprises.
Amanya gange nze Namtebi Sharon nga nkolera wano wennyini Saka Kirombe oba Makindye. Empangula gye nawanguddemu ssente mbadde nga nkozesa mobile money nga nsindika school fees w'omwana ku ssomero. Okutegeera nti mpangudde, nze mutima neegambye nti kambalinde bamale okujja ndyoke nzikirize nti mpangudde. Kyenyinza okubagamba nti si byabafere weewaawo abafere gye bali naye ennamba eri emu yokka era bw'eba ekukubidde omanye eyo si yabafere. Mpulira bulungi nnyo era ndi musanyufu nnyo. Naye MTN Mobile Money mbebaza nnyo mwebale nnyo mwebalire.
Together, we're unstoppable. This is GOTV, and right here is where you can catch the brilliance of Mbappe, the scoring power of Kane, Ronaldo's, and all of the greats fighting for the glory to be crowned the kings of Europe. Don't miss the unbeatable action of all 51 games of Europe's biggest football event live on SuperSport on GOTV and GOTV Stream. The Euro 2024 live. That's GOTV for you. Love it. Smart 24, driving business.
You're most welcome back, ladies and gentlemen, to this second segment of the show. I'm still with Mr. Mwima Andrew, and we are sharing knowledge on equity. You know, we have all sorts of equity. I'm learning today that indeed you can go public, but there's also private equity, and you can do both. I think there's a possibility that you still have private investors and public investors. So it's a very interesting discussion, and I hope you're still benefiting. Now, in the first segment, we defined these two and we got the difference. We got to know that private equity is entirely based on private members actually shareholding into the company. And this can be through a private equity firm or through an individual who wants to actually own part of the company by investing some bit of money. Then the public equity, we are looking at the whole public getting to invest through an initial public offer and then going into the secondary market on the capital markets. But there is also a term that has come up during our discussion, and Andrew, I want us to start here. Venture capital. This is a very common term, especially in the realm of startups and innovations. We've seen, for example, MTN. I'll use an example of MTN. They have so many fintechs, financial technologies, and you hear the term venture capital a lot when you talk about financial technologies. Could you walk us through what these are and how different are they from what we've discussed so far? That is the private equity and the public equity.
Thank you, Anthony, for the always very detailed discussion we have when we come by. Now, a venture capitalist is not different from a standard private equity investor. It's just that the venture capitalist, who sometimes is called an angel investor, comes literally when the businesses are just beginning in the very early stages. Remember, these are stages where most people don't believe in you. You're telling them I'm a fintech, maybe I will assist people transfer money, but people like investing in things which they have seen, businesses which have audited accounts, businesses which have a history, they have a record. That is where most investors maybe prefer deploying their money. Now, venture capitalists and angel investors have a very huge risk appetite. They are willing to go with you, to start with you this journey. Many times the amount of money they will give you is small. A typical PE fund can give up to $1 million to $2 million to an established company. But the venture capitalists, angel investors, $50,000, $10,000. It's actually not little.
It's not little money, but compared to
and it can assist the business get off the ground, such that you start now arranging yourself. Now, the typical discussion we had earlier, those are the investors who will give you this private money, but when you've grown, you're no longer a baby, maybe the business is in the youthful stage, even up to maturity.
Yeah.
There have been cases in the US where some private equity companies can even buy a listed company. You can imagine an investor coming to buy a listed company at the stock exchange. It happens. We saw the story of Dell, Michael Dell, the laptops we have and what.
Yeah.
That is typically what happens. So that's the distinction. But like you've observed, it's similar. It's just that these ones do early stage, then these ones maturity, and those other expansionary phases.
I love the phrase angel investors. They're like angels coming to redeem you from a trap or something that you cannot get out easily by yourself. So they're just trying to test the waters. And also, I think the word venture gives it a lot of meaning. You know, you're venturing into something new, something probably that is going to be exciting, but not now. No one is seeing whatever you're seeing. Amazing. I think that's a very amazing thing.
Yeah.
When do you know when to go where? Because yes, we've looked at public, private, then venture capital, and we have different sorts of businesses in Uganda. And unfortunately, there's a statistic which I don't really want to mention, but because we need to understand this better, I think I'll mention it, that businesses in Uganda will never see their first anniversary. Yet, we are one of the most entrepreneurial countries in the whole world. Imagine. Businesses start up almost every day, and as we speak right now, there's someone who's starting up a chapati business, someone is opening up a restaurant, someone is opening up a boda stage. But before we know it, next year, by this time, there will be no more. So when do we know when to go, where to go, and which sorts of businesses should go where? Because like you've mentioned, venture capitalists look for specific people. The private equity firms also look for specific firms. So how do I position my business, and where do I position it in order to get capital?
Yeah, very interesting questions, Anthony, and which are honestly factual. So many businesses are born, but many times the blunders will arise from the choices of funding which are made. And I won't blame them. There is a lot of ignorance and information asymmetry. People don't know. Before maybe Smart 24 even came and we started speaking about these things, most businesses out there still don't appreciate the capital markets as alternative forms of raising finance. So I would really compel that entrepreneur listening in there, seek out for trainings. Many times when people like me come to the show, we leave our numbers. People think this one is looking for money, but that little knowledge which an expert will give you, and we know the people who can actually fund. We sometimes work with these venture capitalists, we know the private equity funds, we work closely with the exchanges, the different intermediaries that can assist your business at all levels. So information is actually power. And unfortunately, you have to look for it.
And invest in it as well. It's not free sometimes.
It's not free.
I've invited someone here who is very astute with cryptocurrency. He told me for him to be able to invest as he has invested and earn from cryptocurrency, he had to pay someone in the UK to train him at over about 12 million. He had to invest in learning for 3 months. After him losing a lot of money, he had to go back, look for people who had the knowledge and pay those people, and they had to teach him. Now he's enjoying the fruits. But I don't know how many Ugandans are willing to invest in that much.
True. And that is it. And these are things you want to learn in school.
That's right.
It's
unfortunately.
You learn by swimming with the crocodiles. Visit the offices of the exchange, CMA, or even give calls to experts who are hosted on the show. That you spoke about venture capitalists, PE funds, the USE and other players at the CMA. So this information will be given to you, and trust me, there will be a difference. You will be able to always change. This one has supported me up to this level. Maybe it's time I get a PE fund, then it's time I go to the exchange to list my company.
I've seen also, in terms of venture capital, that there's something called pitching. Businesses go out to different avenues where business people meet, innovators, and they pitch for their businesses. And I've seen young people actually grow their businesses. For example, this Jumia business, I would say that young man began as an entrepreneur, and he has grown his business through venture capitalists who have been able to invest in the company. I'm hoping one day he can be able to list as well and become one of the big dogs on the capital markets. But I think it's also important to start small.
True.
Now let's talk about the benefits of first of all, let's start with public equity. The public equity seems to be, of course, the ideal for the big businesses. But what are some of the pros and cons of investing in public equity that could be also compared to investing in private equity and venture investment by venture capitalists and also by private equity firms?
Thank you, Anthony. So remember, when you raise funding, public equity, you're doing an IPO. So these are some of the benefits you will enjoy by doing an IPO through the exchanges. The capital is usually large, large capital. If you're to look at the cases of MTN, Airtel, if you're to add the primary and secondary offers, these companies have raised over £1 trillion by selling 20% of their businesses on the stock exchange. Remember, this money comes from different people. So it's easy for a company which is public to attract institutional investors and retail, the NSSFs of this world, the circles we speak about, the Provident Fund, but even those fund managers from abroad, outside countries, if you may. It is easy for them to trust their money with a company which is public. Then the ability to refinance through secondary offers. We have just seen what has just happened with MTN recently. Then liquidity for shareholders, exit. You spoke about the Capital Works and the initial shareholders in Cipla. Because they were public, it was much easier for them to liquidate. One, because they know the price. The Cipla share or the public company is very clear. You can know if the stock is at 80, why can't you give it to me at 85? So that makes it easier for you to exit as a shareholder. Then improved governance, business continuity, and legacy. You spoke about that statistic, but if we were to honestly ask ourselves, how many businesses in Uganda founded by an indigenous 100 years and above, or even 70 years and above, it becomes difficult for any name to come out. Because most of these businesses, if you leave it to your children, your grandchildren, they may unfortunately lack the expertise. But when you get a venture capitalist, a PE fund, you do an IPO, these shareholders keep the business on its toes and they ensure it always thrives, performs in order to pay dividends and also see a translation in the share price. So it ensures good governance and legacy. Then the ease of benchmarking. The markets allow you to have PE ratios. There are these statistics, your price to book value, how are you using debt compared to your peers. These ratios say something. They help you to improve because you try to beat that target. This is where we were last year. How can we do better? So it helps you to benchmark and to work hard. Then lastly, that reduced over-reliance on debt. Debt is a problem, don't be deceived. Whether somebody is lending you money at 5 or 10%, but that stress of your business to be able to get it out and pay interest consistently is sometimes a burden which the IPOs will remove from you.
Yeah, and I agree. I can't agree more with you, especially in this day and age. Interest rates have ravaged businesses. you find you have to pay interest for the rest of your life. Just like we are looking at our budget in Uganda, we are financing almost 60% of our budget. We are looking at getting to pay back debt. So I think even businesses should learn from that and try to find better ways of raising this capital.
Better alternatives.
Let's talk about the risks.
Yeah.
All is not rosy. Public equity and private equity are not as rosy as we might think. What are some of the risks involved in this?
Yeah, like I articulated as we were beginning, the advisors, it is not a free exercise. You won't tell an auditor, come and audit my books for free. I want to do an IPO. Neither will the lawyer listen to such a statement, the investment advisor. So all these professional services are offered at a fee. Sometimes it's a little bit high. Unfortunately for you, if you interact with the players and intermediaries early enough, some of them are willing to be paid once the transaction has been successful. But it's one of the things which you should expect. The professional services cost you something. Then there are some fears of loss of control. I'm opening up my company. I've sweated with this thing for 40 years. I've sacrificed so much. I've worked so hard. But I'm going to get a fund manager, 10,000 people telling me what to do. So people have that fear.
Asking questions.
Asking you questions.
Yes.
That loss of control. If you're to look at it critically, it's not something worth fearing indeed. Which brings me to a statement you could have heard, Anthony. If you are asked a question, own 1% of an ocean or 100% of a pond. So you will be caught in that dilemma. But when you're to look at it critically, if you can own 1% of a big ocean, much better.
Much
than
having a pond all to yourself.
Absolutely. Because there are people, not even in the public, they don't own a significant stake per se, but the dividends they are getting up 2% of a very large company is worth catering for 100 households, just the dividends alone. Then that loss of confidentiality. As a listed company, you must publish your financial statements every 6 months. In the papers, so people know you. How do you make money? How do you lose money?
Literally, you're walking around stripped of your clothes. Everyone is seeing into the company.
Because of that disclosure. Still, when you are to look at it critically, why not? You disclose the benefits, in my opinion, are much better than you having different accounts for URA, commercial banks, and what you have with your wife. Then there's that short-termism and pressure, which I've also observed from experience. These guys who list their businesses, sometimes they want to see their stock price appreciating all the time. They can give you a call. How has the stock performed today? Because of that pressure, even the management. But later, as you appreciate these markets, though the price goes down, you will have a peace of mind. Then increased scrutiny from the regulators and the public. When you make a mistake, your results have been delayed. The markets can penalize you. They can give you a bill of 20 million shillings because of a mistake, which you wouldn't have incurred when you are in the private space. Then there have been some cases, especially abroad, where there can be hostile takeovers. You have listed your business, somebody who has been eyeing you for long is willing to break the bank to come and take over. Not well founded if you're able to let go of only 50% or 45%, you can be able to mitigate such takeover bids. But those are some of the fears or risks associated with doing IPOs.
Wow, amazing. That's a very deep insight into some of the risks. But I love the way they all have that counter advantage to them. That much as, yes, there are risks, but it's a good thing behind as well, you know. Amazing. Now let's look at preparations businesses can make in order to go into, let's start with private, then we shall go to public. I don't know if they're the same or there could be similarities, but what could be some of the preparations businesses need to make when they're looking for capital?
Yeah. And like you rightly put it, you will discover that by the time you go through the sieve and get private equity, most likely
you can get public.
You will tick all the boxes for going public. And I wanted to simplify it for our listeners, the entrepreneurs especially, without using a lot of the technical jargon. But things you need to address, key questions to answer, and how you prepare accordingly. What are your long-term goals and strategies? These are the things which investors will want to listen to. This means that you need to develop good plans that identify your potential revenue, income, and the resources you will need to attain these different
So it's
goals.
not about where you are right now, but where do you want to go? Where are you taking this kind of business?
The future,
the vision. Yeah.
Yes, the vision. So all of that is
I love that. I've seen so many investors talk about what a vision is, you know, and it's beautiful how most of the richest people we know in the world always had a vision of where they would be today, and they are where they are because they had the vision before. Yeah.
Actually, that is what you sell out there, the vision. How will somebody giving you $10,000, $50,000, $1 million get value out of it? So interestingly, those strategies and plans are one of the core components of a prospectus or an information memorandum. It's simply a business plan, but with that terminology. Then is your management and board experienced to deliver a successful strategy? It's one thing for you as the founder and proprietor of a business saying, I want to do this, but do you have the team? Do you have the team? That's why I used that example of really. Many times for you to excel, however good you are as a CEO, as a founder, you need the team. Depending on how you've treated your team to absorb and buy into the vision, it can make or break your company. So they need to be aware that there are things which we must do 5 years from now and 10 years from now. If you have the ability to retain that same team of professionals for a long period of time, even better. Related to that, you as the shareholders and directors must be prepared for greater disclosure, accountability and transparency, both private, public equity. I used that example deliberately. When your business is between you, your children and wife, you want to buy a car, you will sometimes withdraw company resources.
And no one will question.
Nobody will ask you. You want to buy a nice suit like Anthony's here, you use company money. But those things stop once these investors are on board. Then operational, financial and management systems sufficient to support a listed company. Those are structures
within the company. There should be
within the company. You shouldn't be running around with auditors. Have a finance team. Have a team which does strategy. Have a team which looks at risks in your business and things like that. A team which works hard to
regulatory affairs. You have compliance and all that.
Even investors.
So in other words, what I'm getting, there are no shortcuts to this one. You must be 100% ready to be willing to do what it takes and make sure that people know what they're doing. And you need the right team because you can't do it on your own. Then things like the market size for the company's product or service sufficient to attract broad investor interests. Remember, you're asking somebody for $20 million, 10 million, 5M, even 1 million. This is not little money. But are you going to use that money? Well, really, do you have the market? If it's a company in healthcare or giving a beverage like water and soda, will people actually buy the money after you've built that factory you're looking
capital for. So you need to actually have a plan on how these things are going to happen, the market for your products and services, then the timing. The timing. From my experience, this thing is often underlooked. There are months where it's never a good time to go public or to ask people for money because they are stressed. People are looking for
COVID-19. Let's say, I remember, I think Airtel IPO was delayed because of COVID-19, and people were not in position to raise money at that time because the the financial condition was obliterated.
Yes. Even when you sense the economy is struggling, people don't have disposable income, even to eat food. What makes you think they will buy shares in your company?
That's right.
Or give you the that investment you need? So timing is also critical. That's why the professionals will always need to give you some of this advice early enough. Summarily, that is it. Those are things you must prepare for. The rest are obvious.
But the bottom line is there's no shortcut. There's really no shortcut to this one. You must do your homework well. You must have your team ready, structures. You must be compliant. You must be a legal business. You must have, and there's something I saw in Kenya. The new listing rules in Kenya actually were revised because Kenya has had a drought of IPOs for the past 5 years or more. And they said, now, in the past 5 years, they required 5 years of profitability, meaning you must have profitable year 1, year 2, year 3, up to 5 years. And they revised that to 3 years to be able to accommodate more businesses, which was a very good move. But still, regardless of that, they still need profitability from that, so there's no shortcut. You must be proving that you're going to make money so that people can add you more. Amazing. Our time is past spent, but just in about a minute, how can companies leverage their equity, especially the private and public equity? How can they maximize these opportunities they have got to get this capital?
Thank you very much. Even beyond that, how can your transaction be successful?
That's right.
From experience, at least as an observer also, there are companies which look for money but they are not willing to invest in marketing and advertising. You're not willing to do road shows. Trust me, companies, even the small ones or the not so good ones, which invested, went to places like Mbarara, Guru, Mbale, spoke about themselves. Most of their IPOs were oversubscribed. Compared to those which thought, me who doesn't know me, I'm the big one. Most of their IPOs were undersubscribed. So you must invest in good marketing, have those road shows, and they should be many. I've had the privilege of going to markets in Guru, Soroti, Mbale markets, even Owino and Chikugo. I stand with an interpreter. What is a share? How will you benefit? And people actually get interest. So these people who may give you 500,000, 200,000, they will assist your company when you've listed, because they will give you that liquidity and activity. For them, when they are looking for fees, they will sell.
I have my shares.
But if you're looking for only a big hedge fund from London, or back home here, some of them may buy, but they hardly trade. So that's why you see some counters hardly trade on the exchanges, because they get this wrong from the beginning. Then work very closely with the brokers. Maybe choose the right broker, but work with them. They can also make or break your transaction. Even the exchange, maximize their websites. Then lastly, we are in this age. In the past 12 years ago, social media wasn't, it wouldn't take you anywhere. But right now, having an influencer, somebody who the youth like looking at, speak about your transaction, can actually get you more participants.
There's Shifra, for example, trending on TikTok.
Exactly.
That's right.
Unfortunately, that's the age we are in.
Yes.
TikTok, WhatsApp, somebody to do for you a very nice drama.
Yeah.
Those people will get you the numbers, rather than you telling somebody, do for me a nice report, this is my PE, these are my forecasts. You will get a few people, experts, who will understand, but somebody who has seen the person they see on TV joking around may actually give you their money compared to the nice reports.
Yeah.
I thought I would bring that out because of the times which we are in.
Yeah. Thank you so much, Mr. Mema. Unfortunately, our time is fast spent. Nowadays, our discussions never end well because we always want more. But hopefully, you'll be coming around more.
Yeah.
Thank you so much.
Welcome. Thank you, Anthony. And for the listeners and viewers, I never take it for granted. I'm a public person. I can easily be reached on 0774 163016. You need guidance on investments. You're a business that needs support on maybe raising funding, especially through the capital market space. Our sponsors, I can give you some guidance as much as I can, or even refer you to the people who can assist you start this journey. Thank you so much, and thank you, Anthony.
Well, thank you so much, Andrew Mwima. That's it from us tonight. Thank you so much for tuning in. Remember, the show happens every Monday, Wednesday, and Friday. And all your latest content on the financial markets realm will be shared only and only here on Smart 24 TV now. Till next time, have a very good weekend. Bye for now.
Smart 24, driving business.
Gentlemen, crazy game. I'm going to go crazy in the turn. Flavors of Africa.
Enjoy your favorite shows anywhere. Download DSTV Stream today.
Amanya gange nze Namtebi Sharon nga nkolera wano wennyini Saka Kirombe oba Makindye. Empangula gye nawanguddemu ssente mbadde nga nkozesa mobile money nga nsindika school fees w'omwana ku ssomero. Okutegeera nti mpangudde nze mutima neegambye nti kambalinde bamale okujja ndyoke nzikirize nti mpangudde. Kyennyinza okubagamba nti si byabafere weewaawo abafere gye bali naye ennamba eri emu yokka era bw'eba ekukubidde omanye eyo si yabafere. Mpulira bulungi nnyo era ndi musanyufu nnyo. Naye MTN mobile money mbebaza nnyo mwebale nnyo mwebalire.
Together we're unstoppable.
My name is Amakol Esther. I'm in liquid soap making class. I'm from Terego district, Odupi sub-county, from Oribu parish, Okagu village. So I'm here after getting an invitation from our CDO from the sub-county that there is a project called Grow Project implemented by Nuwebis. In the Lira district, they want women who are already in business. They should come and they should come for a training of 3 weeks. They are going to be transported, accommodation, feeding, and everything. After we reached here, and we were introduced, the first day we were introduced to liquid soap making, I came to the training we had, there were some materials making. It was now a challenge to us because the two materials which were missing, they were making our soap not to be quality. Even the customers could complain that, hey, this soap of yours, it doesn't take long. The color just fades within some few days. It becomes water.